The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
So, of course, joining us now to discuss some of this, what's going on in the regulatory front, is none other than Global Policy and Regulation Managing Editor for CoinDesk, Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Hello, Nick.
Good morning.
So, Rostin Behnam, as we just discussed in the previous segment, he spoke before before Congress. What exactly happened? What was the whole discussion about?
Yeah, so this was a first hearing, and it's really a bit too soon to have any kind of real clarity as to what exactly went down at FTX and how exactly the collapse occurred. So a lot of the questions were kind of more along the lines of were there anything U.S. regulators, and in particular the CFTC, could have done to prevent that kind of collapse? What is required to try and prevent a future similar collapse? CFTC Chair Behnam, of course, pointed to Ledger X, which is one of the companies that did not file for bankruptcy. It said that was a clear example of CFTC regulations keeping a company, within the law, and said that, he really used this as an opportunity to call for more authority to be given to the CFTC by Congress to oversee spot markets. Now, what's really interesting is there wasn't really a clear distinction made between FTX.us, which is the US-based exchange, and FTX.com, which is the international body that was really the first to collapse and the one that seems to have had the most exposure to what was going on with Alameda Research. So that was kind of a fairly large elephant in the room that seemed to be more or less ignored. And I personally think that it would have been good to have a bit more discussion about what exactly U.S. regulations could do to wrangle these offshore entities. Now, the biggest point being made was that with clear regulations, maybe less companies or fewer companies will want to operate offshore. But that was really the extent of that particular aspect of the discussion.
Mm-hmm. So speaking of regulation, DCCPA, which Christine brought up with our previous guest, the Digital Commodities Consumer Protection Act, that was also discussed yesterday. Why is that important?
Yeah, so this is the bill introduced by the Senate Agriculture Committee, which was hosting the hearing. The DCCPA is one of the bills that would give the CFTC some greater authorities over crypto spot markets. The main thing it doesn't do is distinguish between what exactly qualifies as a commodity versus security, which is one of the bigger questions the industry has. But if it passes, the CFTC would be given a greater role in overseeing some of these crypto companies and some of the assets that they trade, which is of course something that CFTC Chair Behnam has been calling for well over a year now. He did say that he believes Congress needs to move quickly to pass it, but he suggested that there are certain areas, things like disclosures, controls, things like that, where the bill could possibly be improved. And, he briefly suggested, a quick pause to try and get that into the bill, but he emphasized over and over again that Congress has to move quickly because he doesn't want to come back and after another bankruptcy and say, oh yeah, well this also this other thing happened and we weren't able to have any insight into it because we still don't have the market surveillance or spot market oversight powers that we have asked for.